What if I told you that striking it rich, I mean unbelievably rich, could be the absolute worst thing to ever happen to a country? It sounds completely backward, I know, but it's a very real economic puzzle that all starts with one simple, kind of crazy question.
I mean, seriously, can a nation be too rich? It just sounds ridiculous, doesn't it? How could finding a mountain of oil or gas or precious minerals possibly be a bad thing? Well, as it turns out, a sudden, massive windfall of wealth can be incredibly dangerous.
And this gets us to the core paradox we're going to unpack today. It's often called the resource curse, and it's this bizarre situation where a nation's greatest blessing becomes its biggest curse, literally hollowing out its economy from the inside out. So here's how we're going to break it all down. First, we'll look at the paradox itself. Then, we'll get into the nuts and bolts of how this economic self-destruction actually works. After that, we'll see some cautionary tales from around the world before, and this is the good part, finding a country that actually beat the curse. And finally, we'll wrap up with what this all really means. Okay, let's dive in. All right, so where did this whole strange idea even come from? Well, it all started with a very specific economic problem that got a very catchy name. It's called the Dutch disease, and it's pretty much what it sounds like, a kind of economic sickness that attacks a country when one part of its economy, usually natural resources, gets too successful way too fast. This incredible boom in one area actually causes other essential sectors, like manufacturing, to just wither away. So why Dutch? Well, the name comes straight from the Netherlands. Back in the 1960s, they found these enormous natural gas fields. And, you guessed it, the money started pouring in. But then, by the 70s, something really weird was happening. Even as all this gas money was flooding the country, their traditional manufacturing exports were tanking, and unemployment was actually going up. It wasn't until 1977 that The Economist magazine gave the problem its name, and it stuck. Okay, but how does this actually work? I mean, how on earth can getting rich in one area make you poorer everywhere else? Let's pop the hood and look at the engine of this economic disease. It basically happens in two main steps. First, there's something called the resource movement effect. And second, you have the much more powerful spending effect. Now, that first effect is pretty intuitive, right? The hot new resource sector starts sucking up all the best workers and investment capital from other industries. But honestly, that's a pretty small part of the problem. The real killer, the core of the disease, is the spending effect. All that new oil or gas money gets spent at home on things you can't trade internationally. Think housing, restaurants, construction, local services. This huge surge in spending causes prices for all those local things to just go through the roof. And this triggers what economists call real exchange rate appreciation. Now, don't worry about the jargon. The idea is actually simple, and its impact is devastating. It just means the cost of doing literally anything at home, paying wages, renting an office, buying supplies, skyrockets for everyone. So imagine you run a factory making, say, widgets. Suddenly, your costs are astronomical, but you can't charge more for your widgets on the global market because your competitors in other countries don't have this problem. Your profits vanish. You're priced right out of business. And believe me, this isn't just some quirky Dutch problem. This sickness has popped up all over the world, and the results are almost always the same. You can just see the pattern here. And it's brutal. For the Netherlands, natural gas led to inflated costs that killed off manufacturing. For Nigeria, the oil boom made their currency so strong that their own farms couldn't compete anymore. Their whole agricultural sector collapsed, and they had to start importing food. And then you have Venezuela, where oil money was used to subsidize everything, which completely wiped out every other productive industry, leading to total economic disaster. The resource changes, but the story ends the same. The Dutch disease is really just one symptom of this bigger problem we call the resource curse. Because when a government can just pull money out of the ground, instead of having to tax its people, it stops being accountable to them. Politics just becomes a big fight over who gets to control the resource money, which, of course, fuels corruption. The whole economy gets hooked on the roller coaster of commodity prices, and all the skills needed for a normal, diverse economy just start to fade away. Okay, it is a grim picture, I get it. But is this curse just unbeatable? Is it destiny? Absolutely not. There is one country that saw this disaster coming and engineered a pretty brilliant cure. So after discovering absolutely massive oil reserves in the North Sea, Norway took a hard look at what happened to the Netherlands and basically said, nope, not us. They decided they were not going to make the same mistake, and they came up with a radical plan. Their main weapon? They created a massive national savings account, a sovereign wealth fund, that today is worth a mind-boggling $1.6 trillion. This fund became their shield, their primary defense against the Dutch disease. And the way it works is built on two genius ideas. First is something called sterilization. This just means that almost every dollar of oil money is immediately sent out of Norway and invested in foreign stocks and bonds. This keeps that flood of cash from ever hitting their local economy and causing that deadly inflation. The second idea is intergenerational equity, which is a fancy way of saying they're saving this one-time windfall so it can benefit Norwegians for generations and generations, long after the last drop of oil is gone. And they are incredibly disciplined about this. The government has this very strict rule. It can only spend the expected real return from the fund each year, which works out to about 3%. That means a whopping 97% of the wealth stays safely invested abroad, never getting a chance to infect the local economy. It's basically the ultimate firewall against the Dutch disease.
So what's the big lesson in all of this? Well, it's that the Dutch disease isn't really just about oil and gas. It's about something much bigger.
This very same principle applies to any massive sudden wave of foreign money. It could be a huge foreign aid package or, and this is super relevant right now, the boom in green minerals like lithium and cobalt. The countries that are rich in these resources, they face the exact same danger if they don't manage that new wealth incredibly carefully. Ultimately, it all boils down to this really powerful idea. The true wealth of a nation isn't what it has buried in the ground. It's the strength of its government, the rule of law, its foresight, the quality of its institutions. You see, good institutions can turn a resource into a blessing, but bad ones will almost guarantee it becomes a curse. Which really leaves us with one final thought to chew on. Maybe a huge resource boom isn't just an economic event. Maybe it's more like a test of a nation's foresight, its discipline, and maybe even its character. And it's a test that, as we've seen, some pass with flying colors, and others fail spectacularly.